Let's bring in today's market panel, Lenore Hawkins, Tomatica Research Chief Macro Strategist, and Paul Dietrich, the Fairfax Global CEO. Thank you both for being here. Lenore, let me begin with you. What the heck happened in the last 24 hours? Yesterday morning, we're down nearly 600 points. Today, we surge. It's almost a 1,000-point turnaround. And are we all focused on the Chinese yuan?
It looks like that's really what's doing it, the market. And I always love it when we talk about the market, as is that some guy that we can like pull aside and go, hey, how you doing today? But it appears that market participants today are feeling a bit of relief that the renminbi, the Chinese yuan, is not crashing as much as was expected. But like you said earlier, it sure looks like they are going to be using that to help fight this trade war.
Paul, let me bring you in. I mean, investors have to feel a little queasy with all of this. Not only is it volatile, but it's all very fragile. Each headline apparently sparking another, well, fall or perhaps a rise. How do you play this as an investor?
Well, I think you have to look at the effects of...
I'm sorry, hold that thought, Paul. Very sorry. Breaking news, Uber reporting second quarter results. Let's get straight to Susan Lee with the numbers.
Yeah,
Susan.
So we have a bigger loss than expected in the second quarter. We're calling it a loss of $4.72. Analysts were looking for a drop and a loss of $3.12 was the estimates. And now, as for the revenue, also a miss here as well. We're calling it $3.16 billion, $1.166 billion. So let's round it up to $3.17 billion. And analysts are looking for $3.36 billion. Now, just speaking to Uber, I just got off the phone with them. The reason they missed here is because the analysts did not anticipate the IPO rewards that they gave to their drivers. So in this earnings report, Uber says that they have included $298 million driver appreciation award that was made in connection with the IPO, which they also announced as well. And what that is that they doled out stock compensation based on tenure to those drivers that have been with Uber for a long time. But still, you know, some pretty strong bookings growth of 31% in the quarter. So they made about $15.75 billion here. But it's important to note that the growth rate is slowing. So we're looking at 31% growth, whereas we saw close to 40% over the past few quarters. So this is something I'm sure that the analysts and the markets will take another look at as well. But as for drivers and trips, still some pretty strong numbers out there.
All right, well, let's get back to the panel. Paul, I'm so sorry I interrupted you there. But, of course, just as I ask you a question, the Uber results come out. But let's talk about Uber if we can. Big miss on earnings, big miss on revenue. They're losing a ton of money. Is this an attractive investment?
Well, in the long run, the answer is yes. They're using the Amazon model. You know, it took Amazon an awfully long time to make any money. They're putting all of their money into basically expanding services, expanding riders. And they do have, because they're cheaper than most of the taxi services, and they've been competing with Lyft, now that Lyft and Uber are both publicly traded companies, at some point they're going to get a lot of pressure to increase revenues. They actually have the wherewithal to do that because they're underpricing the market in terms of the rides, and they can still raise prices without was still staying a little bit under the taxi companies.
See, I don't know. Lenore, let me ask you, because I disagree with that. I don't know how the reason why Uber is so popular is because it's so cheap. And the moment that they raise their prices, all of a sudden you have a whole bunch of other options. So the only reason why it's so dominant is because they're willing to lose money on all of these rides. And when they try to leverage it and have a higher price, Lyft comes at you with a coupon and you get them right back down. So, Lenore, I don't know how they become the Amazon, because it doesn't seem like they can. The main thing that makes them attractive is this low price that makes them lose money.
Exactly. I see you've got to decide whether this is the Amazon model or more, for those who remember, the web van model.
Right.
As a consumer, I love these guys. I love the ability to have an app, and anywhere I travel, theoretically, I can go and use it. The challenge is the insane amount of money that they are spending to really blaze this trail. They're having to deal with unbelievable regulatory problems. For example, in Italy, where I spend the majority of my time, Uber doesn't exist in any small towns, and all you can get in the major towns is Uber Black, which is really just using already professional drivers. So it's just another way for them to compete. Where are you going to have margin pressure? It doesn't exist. Ireland, another place I spend a ton of time. Ireland, Uber also barely exists. When you call an Uber, what you mostly get is just a taxi. Again, where's the moat? Where is Uber going to be able to maintain this really big margin when it's becoming easier and easier for local areas to come up with an app that calls all kinds of drivers? It just, you know, where's the value?
I loved Webvan. I loved it right out of business.
I loved it.
Yeah, totally.
I loved it as a consumer, not so much as an investor.
Totally.
I disagree. You've got basically, if you're still under the taxi prices, no one's going to switch over to taxis.
That's true.
Both Lyft and Uber are now
they're really
under
not
pressure.
under the taxi prices here in New York, though. That's okay. We got to go over to do some other earnings, though. Go ahead.